Okay, so on your document, I think we firstly need to go to page 4. Yeah, that's it, the director's reports. Okay, so this is the director's report covering the nature of the business, which has not changed, and the review of the financial statements, which effectively is an audit by the auditors. We do have the auditors themselves here, which is Crowe HZK, and we just want to also thank them and acknowledge their contribution to this year's financials as always. The directors in office over the last year also have not changed as far as I'm aware. And there are no events after the financial report that are of any material nature to what has happened before. So that is effectively the director's report. And I think very good to acknowledge that and be clear about that. The next part is the independent auditor's report. And I think most important is the second paragraph, where the auditors confirm that in all material respects, the financial statements do represent the financial position of the association and the financial performance and cash flows for the year. And in terms of their opinion, this is an unqualified opinion. In other words, it's a clean audit, which is probably the most important part of the entire financial statement. So having dealt with that, also again wants to thank our auditors. I'm not sure, Anne, who is here representing the auditors in this year.
I haven't been sent a name by the office. I'm not sure who's come.
Ethel is just entering now.
Or is it Ethel? Okay.
Ethel is just entered now.
Okay, great. Welcome, Ethel.
So again, on behalf of the board, Ethel, with you here, I just want to thank you and your team for the support that you continue to give us. This was our second year with a new head of finance, and in this year, with the support that you've given us, things have actually gone much smoother in terms of processes, and I want to thank you for that, Ethel. Now, just to take the meeting or the general meeting through the annual financial statements, I would like to focus firstly on the income statement and the details in the income statement, and then we'll come back to what used to be known as the balance sheet or statement of financial position and other relevant information. So we'll see if you could maybe go down to the page, I think it's page 22. Sorry, it's page 22. Thank you very much. So this is, so our programs can be broken down into 3 for those who are joining us for the first time. We have 3 programs. We have the Learner Development Program, which we'll cover now. Thereafter, there's the Bursary Program, which we'll cover later. And then we have a final program, which we call the VINE Program. And we'll look at those separately, but in the overall income statement, they are shown as one. And so we work through these separately so that you can see and get a feel of what's happening within the program. All right, so I think that's important. Firstly, we start off with the donations for the Learner Development Program. You can see that 2021, we received donations, interest received, and student registration fees of just over 2 million. So it's 2,088,820 Rand. This is significantly lower than the year before. And we can chat a bit about later, but certainly our donations received were significantly lower, which we expected. If you remember, if you attended AGM this time last year was a good year in terms of the profitability, but we were already seeing headwinds in terms of fundraising in a continued COVID environment. Last year we had TRS, which is money was recovered from the government, as well as some rental income, which were non-existent in this year. So the overall picture is that 2,088,820 from an income perspective for the learner development program. What we then also did last year was to review our internal allocations in terms of our expenditure. And so if you see our allocations in terms of salaries here, there's been a significant change. So we haven't hired more people. In fact, we've got two members less, if I'm correct. However, we also looked at our internal time spent in allocation together with what Anne was talking about in terms of what our focus is going forward. And certainly the replacement for those people were in the learner development and in the enrichment area, and also reallocation, of course. So whilst the overall expenditure looks like there's been a huge increase in allocations, and that has been correct, especially with regards to salaries, it certainly hasn't been as a result of a or at least lack of control of costs. Some of the costs have increased because we've had a bit more activity in this year compared to last year, but certainly all of the costs are in line with what we expect. And I think my comment earlier stands that, we felt that the costs were actually very well managed in this environment. Okay, so if you just look at the major one, I think printing came back in a significant way. We went back to having teacher salaries, which happened in this year, and last year was very little, so 739 versus 170. We saw a saving last year because of lack of classes, and we, as much as possible, wanted to go back to normality this year, and so that's why there's significant expenditure there compared to last year. And of course, that goes into the feeding scheme and a few of the other items as well. This year, we also saw the resumption of winter school. That's 158,000 at the bottom, which wasn't there last year again because of COVID. So overall, I think higher costs, but certainly not because of lack of management, or in fact, it was a proactive thing. And so if you scroll down a little bit, you'll see that this year we do have a deficit in this program of 1.5 million. Our policy is to try and keep 3 years or 1.5 years worth of reserves here. If you look at our overall expenditure, so last year our closing balance, or at least accumulated funds at the end of the year, was 4.567 million. And so when we made the decisions in this year and last year, we were comfortable that we had some, reserves to work with. And that's how, we're able to cushion the blow of 1.561 deficit. At the moment, we are sitting, or at least at the end of the year, we're sitting at just over 3 million, which is 3,006,581 in terms of accumulated funds. If you scroll down to the next part, this is the income statement for the bursary program. The grants received slightly less than last year. We did have some bursary funding that we brought forward, and we awarded less than what we received. So we do carry some bursary funding forward. And of course, what happens is that we earn an administration fee, which in this case was 811,000. We also did receive some interest in this year, but no TERS or TERS. So the overall picture is slightly down on last year, 851,000 as our net income. That's compared to 1.182 from the previous year. So slightly down, but not as significant as the other program. If we go down again, what we'll see is the impact of the reallocation also coming through here. So the permanent staff in terms of allocations here is significantly lower because the funds have been allocated to a different program. But certainly if you look here, the impact of the reallocation together with the other costs, which again are in line with last year, means that in this year we actually do have a slight surplus in this program. And we think that the way that is currently going and what our expectations are going forward is that there isn't going to be a problem even in next year in terms of this bursary program. So the deficit for this year is non-existent here, whereas last year we had a bit of a deficit, which necessitated that review, which I talked about earlier. And so our surplus for the year is 67,910, and our accumulated funds at the beginning of the year was 46.5 thousand rand, and so our overall accumulated position is actually better in this year of 114,421. Here we don't try to keep as much fat because really this work that goes in here depends on the bursaries available. Of course, we would like to have more bursary and administer them, but it's not what our focus is. So if you then go back to the last one, so if you go down to the last one, which is the VINE program. So this is the last separate program, was the last leg of our programs. This is very straightforward. It's just a VINE program. We receive a straight donation for it. We don't charge registration fees. And in terms of expenditure, we just spend what we can and what we plan on the program. So there's a mathematics science camp. There's some salaries there from an admin side, as well as the teachers who help us. That, as you can see, the activities meant that the teachers' expenditure was slightly higher. And of course, there's a feeding scheme, etc., etc. So in this year, we received 1.740. Our expenditure was 1,058. There is a surplus like we had last year. And again, this just gets carried forward and will be used on the program itself. So those are the three programs, but I think it's important just to see how those fit together and how that translates to our overall balance sheet or statement of financial position. So I'm going to ask this just to scroll up. I think it's page 16. So I'm just checking on my side. Sorry, page 9. So we'll start with the statement of comprehensive income, or income statement for those of us who've been around for a few more years. We're not going to go through notes unless there are questions. So I think that what we're looking for is, if you scroll down, as we'll see, yeah. Statement of cash flows. Scroll down again. Okay, maybe it's up then.
What are you looking for, Thando?
Page 8. You're on page 10, I think.
Page 8. Yes,
there we go.
This one.
Thank you. So this is the statement of comprehensive income. As you can see, this is for the year ended 31st December 2021 again. You're comparing 2020 to 2021. We received grants and bursaries, awards as mentioned there. There is a gross surplus from that, and there's other income and operating expenses. This is a summary of what we've seen later. So it's all three, call it income statements in one. There is also investment revenue and fair value adjustments, which have included there, and those are covered in the notes to the annual financial statements. But the net effect is that this year we've seen a deficit of 534,581, whereas last year we saw a surplus. And so that's what I meant earlier to say last year we had we're in a good position, a bit of a surplus at the end of the year due to the reduced activities. Now we're seeing the reverse of that because the activities have returned, but our income is a bit lower. So if you scroll up to the page before, we'll see. Thank you. So that 530,000 comes through here in this statement, as you'll see just now. So the non-current assets are seen on note 2 and note 3. Again, I'm not going to go through them. You can see there's the property, plant, and equipment, which is largely the same, and an endowment fund, which increases because of the market value last year, as well as the continued contributions we are making as an organization. So the non-current assets are actually up, call it from 2.320 to 2.7. And if you look at trade and other activities, and those would be trade and other receivables, there's cash on hand, as well as total current assets. Well, those come to the total current assets. Those are up from 9.193 to 9.4884. So total assets are actually up from 1.5 million to 12.208. The major difference, though, will come through in the next slide. So the net loss comes right straight through to the reserves. Sorry, same slide, the next part of the section. Thank you.
Sorry.
Sorry, my bad. It's difficult to drive when the driver is telling you to turn left and you have to turn right. Good thing I'm not a taxi driver. But what I wanted to say is that, you know, for those of us who know, the assets effectively equal the reserves as well as liabilities. So the reserves in this year have gone down by the 500 odd thousand that our income statement shows. So from 6.4 that we had, 6.477 we had in reserves last year, less the loss that we've made on the income statement brings it down to 5.943. I think still a very healthy position, although our reserves would like to see that increase year on year. There will be years like this where for whatever reason the market is tough, you're not able to raise as much money, but you have to continue to provide the service within your, of course, and that's what you've seen there. And then in terms of our liabilities, and these effectively net off against some of the cash numbers. So you might want to ask, why do we have more assets when our reserves have come down? Why do we have more cash? A lot of it is timing. So we would, you know, receive funds from donors before, you know, we can spend them, and so as you'll see, the trade and other payables have increased from 2.3 to 3.6, and the deferred income is slightly flat. Well, it is flat, but slightly lower. And of course, we have other short-term employee benefits, which in this case have gone up slightly. And so as long as those liabilities, which are short-term liabilities, are well within our cash and cash equivalents, which is the case, we don't really worry about that. But it means which is quite nice, we've got a bit more money in the bank. And we don't mind when donors give us money beforehand because we can account for it. And of course, as we saw in the income statement, when we do have the positive cash, we try to, within reason, of course, without taking risk, but to invest that in sort of short-term deposits that give us the income that we saw. So overall, Chair, I think a very good set of results. And again, thank you to management for navigating in what is probably the choppiest, the most difficult environment since I've been involved for a few years now. And so, you know, very good job, well done. And I think for everyone here should be pleased that we have the reserves that we have. Of course, we need to fundraise. We need to help Sisibusi in whatever way we can, from fundraising to introducing to potential donors, and also any contributions that we can make to the work that is being done to make sure that the organization keeps growing from strength to strength, as we've seen in the last 4 to 5 years, and even before that. So I don't know if there are any questions, Chair, before we talk about whether to approve these or adopt these. I think we adopt them. Not sure what the technical term is.
Okay. Well, in the first instance, are there any questions for Thando? I guess the silence means you've done a very good job in explaining to us, Thando, what we've been doing with our money over the past year. Yeah. Sorry, I didn't hear that.
Thank you. I think that was feedback.
All right, thank you. If there are no queries, we once again must thank Thando and Yazini and Ethel, as part of the auditing team, for their very considerable work over the past year. But of course, also we must thank Busi and her team for spending the money carefully and judiciously at a very difficult time. And of course, all the donors who are represented in that financial report, those who've been with us for a long time, but also Robert Ensor, who became a donor last year, for a once-off donor, giving us much needed money in the middle of that pandemic. So thank you, everybody. If you're all satisfied that this is a set of finances that you can approve, perhaps we can move to adopting the financial statements. Would anybody like to propose the adoption of the financial statements?
I'll propose it, Rosemary Duval.
Thank you, Rosemary and Brendan. That's great. Okay, I think Brendan probably got the right word there, saying approved. Okay, thank you very much.